Ira Epstein of Linn and Associates with your metals market wrap-up, and this is for Monday, the 6th of May, 2019, and we're right now at the time of getting out of 4:20 in the afternoon. About 10 minutes ago, there was a news special that the president's authorized Mr. Lighthizer to write up the new tariffs. They'll go into effect on Friday at 12:01 a.m., I guess, or it could be Saturday morning. The Chinese delegation is supposedly still coming. Supposedly the vice premier is coming. But the word is that the Chinese have reneged, at least that's what we're being told in the American press, on much of what had been agreed to, and the president got fed up, and so be it. So what you walked into, well, yesterday was tweeters, where he showed his frustration, threatened the tariffs. Today he's authorizing that they be drawn up, be ready to go. Gold rallied off that news, not dramatically. By the end of the day, the last trades were closer to 1281 than they were 1283.80. Copper market, if you take a look at it, was up. It came off the lows, 8 cents. That's a dramatic rally. So behind the scenes, something is going on. Will you know it and I know it? No. It's all going to be private. By the time we find out, it's old news. Keep that in the back of your mind. Stock market, the bulls came out buying in force after the deep break that came on early from the president's tweets last night. So let's go to the gold chart. You can see that you're staying under, and this is a weekly chart of closes only. You're staying under the 18-week average, which is this red line. That gives the market a downside bias. When we take a look at a daily bar chart, you can see how the market went down and rallied back up. You got to remember on a chart, you got to throw away what you know right now happened and caused events to happen. You're trying to figure out what to do from there. As of this moment, what I see in the chart, lower highs, lower lows. That's bearish. To negate that, you've got to take out 1289.40, and on this current pattern, that would not create a bull defined as higher lows, higher highs. You'd have a lower low and a higher high if you went through that. What about potential resistance? Well, the 18-day average of closes is one of my favorite numbers. Regular viewers here will know that. I call it the line in the sand because so often it's a number that the market from an extreme, be it up or down, gets to and tries to figure out what to do from there. That's what I think is going on. The market adds to the bearishness if today's low of 1278.10 were taken out and you don't go through 1289.40. It would then make this day's high, today, another swing line high, and you'd be continuing that pattern of lower highs, lower lows. Sometimes you can look for support at these black bands and resistance at this band. They're called Bollinger Bands, an algorithm designed to keep the market trading within it 95% of the time. In my charting course, I really get into this because my belief is the first time you hit the band is where pros take money off the table. I'm assuming that when you're under the 18-day average, you're having a downside bias there. On the upside there. Does it always work? No, markets can hit that number and keep running, but that's not what the high percentage play is. The high percentage play is 95% of the time the market's going to stay within the band, not out of it. Then I add momentum. So what you have in this market is momentum is up, the trend is down, and the bias, because you closed at 1283.80, which is under 1283.90, down. Take out 1289.40, everything changes on the chart. I'd say you come out of a downtrend, but I'm not convinced you start an uptrend. In GLD, the popular ETF for gold, lower highs, lower lows, same thing, same pattern. You've got momentum up. The market closed under the 18-day average of closes, and that's the battleground. To negate the downtrend, you've got to get back over 121.55. That was the high last week, or towards the end of the week. In GDX, this is different. You've got this embedded reading. That rules the day. Until this is lost, with the red line closing back over 20, this market, I think, on rallies continues to get sold by the pros. Momentum, in my theories, leads price. Is it all the time? It's most of the time. Certainly not all. They can run together. Do I ever see price lead momentum? It's rare. Okay, it happens, but it's not as common as the opposite. Lower highs, lower lows. You could negate or give a warning sign by taking out 2059. It would break the pattern of lower highs, lower lows. It could even set up higher lows, higher highs, but regardless, you'd have to close back over the 18-day average to get the bias up, and momentum would have to be lost, and this rules the day, to me at least, momentum. In the gold-silver ratio, we've done this before. We keep hitting this 18-day moving average of closes and bouncing back and forth from it. Interesting. In the silver chart, and this is July silver, I'm going to soon put up, I'll make it probably August gold, August silver, so we get them together. If you take a look at July silver, lower highs, lower lows, bearish. Where's the resistance? Well, if you take a look, it's right at that 18-day average, 1497.80. Today's high, 1499. The market didn't do anything from there. This market, unlike the gold market, could turn bullish like that if you took out 1499.50 and closed over the 18-day average of 1497.80. That's all based on a closing basis. Right now, you're in a resistance point. In copper, I'm going to repeat what I said. When you hit the Bollinger Band, be it to the downside, I think the pros, first time you hit it, taking money off the table. Same thing on the up. Can you leave money on the table that way? Yes. But if you're playing Bollinger Bands, realize 95% of the time the market will trade within them. So this market breaks out on Wednesday, goes down to the 100-day average, and then starts accelerating down. Gets a bounce by Friday. Today it goes sliding through. Now, if we take a look at Friday, let me show. You went to the 100-day average and stalled. That put back into play the lower Bollinger Band. It's like a pinball machine. Once you hit one of the key numbers, it's like a reset. And on the reset, what was a number that you went through, think of your kid knocking down your neighbor's fence until you get somebody to fix it, it's knocked down. But it's reset, put back up when that gentleman or woman comes out and fixes the fence. Well, same thing here. So now if you drop again, the Bollinger Band came into play, and out of this you have a monster reversal. And that's nothing short of a key reversal day. Now to get real bearish the market, what are you stuck with? You got to be looking to get back under today's low. Also, the market's in an oversold condition with momentum trying to turn up. This is not bullish, but it's certainly no longer the bear market that it was. It could get bearish again, but it's not there now. In the July platinum, again, the Bollinger Band held on Friday. You tried to break through it today. It held again, and you're getting a bounce. Are we trending, though? Not really. You got a higher high, a lower low. I don't see anything in that market. In the palladium market, you reestablished the downtrend, but you're oversold as you're doing it. You have the lower highs, lower lows. Again, the market rallied and has been fighting at the 18-day average of closes, that line in the sand. This market could turn bullish out of nowhere by getting over 1370, what is that, 330, that was Friday's high, closing over the 18-day average, and getting, if you could at that point, momentum to stop pointing down. That would be the warning sign, though, certainly, and if I were in the bear camp, that'd be a number I would not want to see. In the dollar index, we have a market that's got lower highs, lower lows. The trend is down, but not the bias. You need to close under the 18-day average to do that. Momentum is pointing down. So you put it together, you got a pretty strong story here for a lot of crazy action in the markets. And as I started off in telling you, we've just at 410 or 405 heard what the plans are for the tariffs. We've heard that the Chinese delegation's coming back. What is that going to mean for all these markets? Well, one of the things we do is we write for futures markets. We write for people like you that are watching. And if you're into that, we'd like to send you what our research looks like. There's no charge for it. We'd like to put it in your hands if you haven't seen it before. If you've seen it before and you haven't joined us, what can I tell you? You're missing out. How do you get it? Give us a call for your free trial. You can also go to our website, sign up for it there. You'll see a carousel of free offers and run with it at that point. I'm Ira Epstein. You have a good day, and I'll see you tomorrow.